Happy Thursday, ladies and gentlemen. Allincrypto here, and welcome back, guys, for what is going to be nothing short of another jam-packed daily market update. And boy, oh boy, is this going to be a jam-packed one. To start, yesterday we had the Labour budget in the UK. The main thing that will affect you as a cryptocurrency investor is, of course, the changes to capital gains, the lower tax bracket. So anybody that's in that 20% tax bracket, I think it's under 40-something thousand. It differs from England, Scotland, and Wales just slightly. They previously had to pay 10% capital gains. That's now nearly double to 18%. I think people, even though that is very much bad news, were expecting worse news. So bad news doesn't seem like bad news, even though it's bad news. And if you're in the higher tax bracket, you're in that 40% income tax bracket, and you're earning over, I think it's 40-something thousand a year, you previously paid 20%, you're now paying 24%. Rather interestingly, in relation to them being for the working man, and you would kind of have derived that the working man might perhaps have meant somebody that was earning less money and having to work, I don't want to say harder for it because I don't think that's the case, but you see where I'm going with that. So very interesting. I just wanted to cover that to start the video off. That's the main sort of thing that I took away as a cryptocurrency investor that you need to watch out for. You're now paying high capital gains. There was things like inheritance taxes. I feel very sorry for those farmers and things like that. You know, it was, in my opinion, a very poor budget. A lot of it didn't make sense. You only need a calculator to work that out. But we'll leave that here for now. I'm sure I don't need to talk about the amazing job that Labour's doing anymore. We've got a lot to talk about today, guys. We're going to be looking, and we've been highlighting throughout this pullback the accumulation that the ETFs have been doing. And we're seeing extraordinary accumulation take place right now. Conveniently, as Bitcoin is now broken out of that descending, broadening channel, and ultimately the biggest daily inflows ever essentially took place yesterday in regards to IBIT, which is BlackRock's ETF. We looked at them accumulating Bitcoin and the kind of push-up that we've seen. Now the ETFs have over 1 million Bitcoins. Satoshi's wallet has 1.1 million. We'll be listening to, I think it's Jeff Safar or James Safar actually talking about this over... I believe it's on Bloomberg. Demand for Bitcoin ETFs has been kind of extreme over the last 13 days, with $5 billion in the last 13 days of inflows. This is only set to, I think, accelerate on the back end of the year, certainly when options start to get sort of repriced or positions get taken, or there's a kind of liquidity unlock going into the back end of the year, certainly December and January, the end of the year, start of the year. We'll be relating this all, of course, to the Bitcoin chart, why it's significant. It wasn't just ETFs that were accumulating. It was also the likes of whale accounts were aggressively accumulating at a never-seen-before pace. I think a large part of this would have been linked to the ETFs and them showing up as whale accounts, of course. But even in regards to Bitcoin on exchanges, it's been getting absolutely diminished. So there's this great fundamental and technical synergy that we've got going on with Bitcoin that ultimately leads us to believe the higher prices are on the horizon. I think when Bitcoin performs, altcoins will overperform just like they have previously done. And that works both ways. We've seen them overperform to the downside. They're likely going to overperform to the upside. So I do think it's interesting when we look at the altcoin market, what we're seeing. We will be talking about the altcoin market because the New York Stock Exchange is now seeking to list Greyscales crypto index ETF. Grayscale had a crypto index product that we've been tracking technically, and we've been using that as a barometer for being bullish on the space broadly. You know, if that's going to 10x, what are the altcoins that are held within it going to do? And there is a bit of a discount trade that needs to be closed there. They've, of course, filed for an ETF, and now the New York Stock Exchange is essentially seeking to list that ETF once approved. This is a great step in the right direction. We'll be looking at their digital large cap fund. And, of course, a lot of people won't be talking about this. The Treasury themselves, the US Treasury themselves, released a paper. It was a 132-page paper that we sat through. And, of course, one of the topics, this came out, I think, yesterday, is on digital assets and the Treasury market. Now, stablecoins are going to play a vital role in a global reset and actually helping the United States in that environment where we move towards a more kind of internet of value system where there isn't just one world reserve currency. I see multiple reserve currencies in my opinion. So we have a hell of a lot to get into, guys. Let's dive into it all. This is Eric Balanchunas, the man to follow when it comes to ETFs, highlighting pretty appropriate that the biggest daily inflows ever for IBIT is what pushed the US spot ETFs over 1 million Bitcoin. Guys, there is only 21 million Bitcoin out there. And the US ETFs already own 1 million of it. We are witnessing an institutional takeover. This is just ETFs within the United States, obviously the largest pool. It's a great fundamental narrative, when you factor everybody in. There's already, I believe, a shortage if we are to wake up to the realization of Bitcoin, or more people are to wake up to the realization of Bitcoin. We're going to a Bitcoin conference next week, which we're very excited about going to. This is very interesting. And this is huge. And BlackRock's daily flows, of course, were nearly $1 billion in one day. Pretty sensational. This is James Seyfarth. This is what I want to dive over to, actually talking about this. We'll play this clip. We'll speed it up a little bit. And then we'll move on to Bitcoin. And the convenient thing for us is throughout this pullback, and we've always expected this to just be a pullback, and we've said we'll be right in enough time in what is a broader uptrend. We've seen accumulation continue. And you are well and truly out of this channel now, and you're looking for that acceleration. You're walking out. You're going to start running out very soon, and certainly making it towards that 130, 151, and then potentially $309 $1,000 target. If you are going to become a Patreon, guys, do go and watch last night's video. We did with the Patreons talk about reset more broadly, and the fact that gold, silver, and Bitcoin are all signaling what's to come, and potentially the dollar. We've got lower targets for the dollar. Are we going to have a breaking of that channel that it's been in since 2008? Conveniently, also when Bitcoin was created, and there's a whole kind of there's a lot of links there. Let's dive into this, and then let's continue on. Let's look at what the Treasury report has to say, and then talk about the New York Stock Exchange listing and a crypto index ETF.
You look at the inflows that you've seen, and is there anything unusual about the way you've seen these flows and the price movements along with them? I mean, it's a very significant amount since they've started.
Yeah, I mean, these things they took in tons of money. Like, they launched in early January. They took in tons of money in March and April. Obviously, they took in a ton of money right when they launched. But the last 13 days have been kind of extreme. I mean, 12 of the last 13 days have been inflows, and the total inflows are just shy of $5 billion. So we're at like $4.7, $4.8 billion that have come in just over the last 13 trading days. So I think some of this is momentum chasing. Obviously, as price runs up, some of this has relation to do with the Trump odds of victory. People are, I think that a Trump victory would be good for Bitcoin. I don't know exactly what's causing it, but there's a lot of demand coming into these ETFs for sure.
So how does this compare with what else you're seeing in the crypto world? Because the standout you've seen between Bitcoin and Ethereum has been pretty significant here. Is it because Bitcoin alone is part of the Trump trade?
Honestly, no, it's definitely not that. So it can't just be Trump, because in my mind, Ethereum might actually benefit more potentially from Trump victory. You can make that argument, right? But Ethereum ETFs as a whole just are not seeing the same level of interest. I mean, you talked about 23 billion since those things launched in January. Ethereum ETFs launched in July, and technically they have a net outflow of $500 million. So the demand is just not there on the Ethereum side of things. There's a lot. I could sit here and talk for this entire segment about why I think that is, but some of it just has to do with Ethereum being somewhat more complex. People understand Bitcoin a lot easier, right? It's just digital gold, digital store of value. It's a bet against currency debasement, all of these different things. And then you look at Ethereum, and is it, a tokenization platform, a digital app platform? Who knows? There's a whole bunch of ways you could describe it. And it's just, I think investors just aren't ready and fully equipped to understand what's going on there. And Bitcoin is one of one as far as most people are concerned.
We'll leave that there. And I do want to talk about the election. The sigh of relief. I think there's a lot of angst and a lot of sort of people at the starting line waiting for the firing pistol around the election. Next month, we're going to basically see that take place. And I think after that, if you look at historically election cycles, they align with global liquidity cycles. They align with Bitcoin 4-year cycle. They align with PMI cycles. I think we're really going to see an acceleration of assets, certainly risk assets on the back end of what I believe is potentially, we have we're more favourable, I believe, to Trump winning it, and I think the odds are as well than Harris. But we shall see. The interesting thing about all of this taking place again is how this has been taking place during this pullback in what is a broader uptrend, ladies and gentlemen. Yesterday, to move on, the Treasury released a 132-page report. And one section that they look at is digital assets and the Treasury market. And it talks about the trends in digital asset growth and usage, rapid growth from very low levels. Talks about the gobbling up of Treasury by Treasury bills by stablecoins. What are stablecoins and why are they growing? Growth in stablecoins has resulted in a modest increase in demand for short-term dated treasuries. These essentially are CBDCs. And even if you look here, it says medium-term regulatory and policy choices will determine the fate of this private currency. History shows that private currency that does not meet NQA requirements leads to financial instability and as such is highly undesirable. So there is going to be, Tether in my opinion is going to lose its ground and you're going to see the rise of, I believe, real USD. And here it puts sort of assets that are being backed. You know, it's ultimately coming. It shows the rapid growth and massive volatility might lead to future hedging needs and flight to quality demand for treasuries. Interesting. Polarities between the digital asset and the ecosphere and existing financial markets. What is tokenization? A broad overview. It talks about the tokenization, the promise of tokenization in financial market infrastructure and the implementation of it. Key ongoing projects in tokenizing US treasuries. And it mentions another, it certainly hints to JP Morgan's ONCC protocol. DTCC, which is specifically working with Chainlink to ultimately do tokenization and SWIFT. Projects leveraging blockchain. It highlights a vast variety of projects, or some big project, European investment banking, etc., etc. And there's lots of crypto links all over here. Key potentials for benefits of tokenizing US treasuries, potential risks and challenges, financial stability risks in future state when the tokenized market is significantly bigger. Designing DLT blockchains for tokenization treasury framework elements. And there's a lot in here that we really need to go into in a lot more detail. But I wanted to highlight this because the conclusion is, through the overall market for digital asset remains quite small in comparison to traditional financial assets like equities and bonds, interest has grown substantially over the past decade. To date, growth of the digital asset has increased marginal incremental demand for short-dated treasuries. This so far come primarily through increased use and prevalence of stablecoins. Institutional adoption of high beta Bitcoin and crypto might lead to an increased future hedging demand for treasuries. Advances in DLT and blockchain offer the promise of a new financial market infrastructure with unified ledgers, leading to enhanced operations and economic efficiencies. There are several ongoing projects and pilots from both private and public sectors, actors to leverage blockchain technology in the legacy financial market ecosystem, particularly by DTCC and BIS, and there's links to cryptos you can derive from that, will likely require the central bank and tokenized USD CBDC to play a pivotal role in the future tokenized payments and settlement infrastructure. It's not going to be the only one. Legal and regulatory landscape. Operational, etc., etc. So this is huge. This is the US Treasury pushing this. Now, I've been in the crypto space long enough to sort of understand that this was a pipe dream at one time. The last little bit of news that I have for you is the New York Stock Exchange themselves are seeking to list Greyscales crypto index. This is obviously on the back end of them filing for their ETF. And this is, of course, what they hold: Bitcoin, Ethereum, Sol, XRP, and AVAX. And we have looked at Greyscale Digital Large Cap Fund. We predicted it from down here to get to up here. Well, we predicted it first here and then here. And now from here, it was about a 10x. What's the crypto space going to be doing under that context? And we're predicting Greyscale Digital Large Cap move in the same manner that we were predicting Greyscale's GBTC move. And you can see how this made target. And I think Greyscale Digital Large Cap Fund is very much on a similar trajectory. We also did the same thing with Ethereum's GETH or Grayscale's GETH. So that's it from me. A lot still to come. We've got non-farm tomorrow. We'll be reporting on that. Not so bad news, but also bad news on the budget in the UK. And then, of course, we're heading into elections next month. Very exciting and amazing time to be in the cryptocurrency space and alive more broadly, as we're experiencing, in our opinion, a monetary shift. That's it from me, guys. See you all in the next one. Thanks for watching. See you soon.